It's been a wild ride, as we've been saying, for cryptocurrencies in recent weeks as well. Now, most major tokens, including Bitcoin, hit record highs in December, followed by steep falls. So, the big question on everyone's minds, including fund managers and taxi drivers, is, are virtual currencies headed all the way down, or could this be the time to start investing in them if you haven't already? Let's take a look at how the biggest cryptocurrency of them all, Bitcoin, did last year. Up to its peak in mid-December, it rose a whopping 1,900% over that time. Other cryptocurrencies like Ripple gained even more on a percentage basis. But the fall from those highs has been almost as spectacular. Take a look at that. Bitcoin lost 40% of its value since mid-December to a low of around 10,000 US dollars per unit. It's since recovered a little bit of that ground, but altogether, cryptocurrencies lost around $200 billion in market value. The most recent slide was triggered by South Korean regulators saying last week that they may shut down domestic cryptocurrency exchanges. And China has reportedly ordered its banks to stop funding virtual currency trading. It shut down its cryptocurrency exchanges last September. People in China and South Korea have been among the biggest investors, you might remember, of virtual currencies in 2017. Meanwhile, the US markets regulator, the Securities and Exchange Commission, says effective ways of protecting investors need to be examined before it approves exchange-traded funds based on cryptocurrencies. Joining me from Miami is Jeffrey Tucker. He's the Editorial Director at the American Institute for Economic Research. Jeffrey, welcome back to Money Talks, as always. So it looks like the regulators are getting tougher on cryptocurrencies. Does this mean the end of that golden era when cryptocurrency investors were operating in a free-for-all market? And could this spell the end of cryptocurrencies as we know them?
No, I think it's just beginning. The regulators can slow us down. There's no question about it, but they can't stop us. I'm at a marvelous conference in Miami, 4,200 attendees, enthusiasts and investors and entrepreneurs. And the ICOs are just all over the place. The initial coin offerings are going like crazy. I saw 40 presentations yesterday. Everybody's super enthusiastic. The fall in the price has shocked some people, but old timers in the space always enjoy these kinds of rides. We like to say that Bitcoin's on sale this month.
Here's the thing, though, about the whole regulation issue. Do you think that now, with greater regulation possibly on the horizon, we're now going to start to see more institutional investors coming in rather than the kind of investors sitting in their dorm rooms in universities, for example?
Yeah, I know what you mean. Of course, mining is long gone. But, you know, the thing about the technology of Bitcoin and cryptocurrency is it resists that kind of centralization. So, yeah, we're going to get a lot of institutions involved, but I don't think it's going to drive out the smaller traders, the small investors. It's so easy to get into the market and move your money around. I don't think anybody's going to stop that. Let's not forget, we're not dealing with physical goods here. We're dealing with mathematics, and that's a very different matter. By the way, I would recommend to you that you head over to the St. Louis Fed website and check out a new paper they have on cryptocurrencies. It's actually a wonderful paper. It totally defends Bitcoin, says it's just as robust, if not more so, than fiat currency. It's right. Interesting. So you're starting to see some real friendliness on the part of some, I don't know, establishment voices here.
Okay, but I think you mentioned something key there, that it's easy to move around, and part of the reason for that is liquidity. These cryptocurrencies trade on very, very thin volumes, and it is very easy to manipulate these markets, isn't it?
Well, it depends on the currency, but yes, a new token coming out right now, a handful of players can drive up that price and have a lot of fun doing it. It's not going to, they can't sustain it, though. Over the long term, the more people that get involved in the markets, the harder it is for any single players to move it. You can't move the Bitcoin market. No single institution can do that with Litecoin, even Monero or some of the bigger ones. But some of these tiny ICOs, I mean, I don't know. I mean, I look at it like this. Most of these ICOs, most of these tokens are going to fail. You might be right that most are going to zero, but I don't think anybody in the sector really cares. You know, most movies fail. We still make movies. So it's kind of stupid this way in the crypto space too.
Do you think that as regulators clamp down more and more, that it's going to be driven further and further into the black market, where it's even harder to regulate and becomes the purview of criminals? We are running out of time, though, Jeffrey.
Yeah, that is a real concern. You're not going to suppress these markets. They're going to move somewhere. If it's going to go into the gray and black markets, or it's going to go somewhere else in the world. There's in the long run, this market just can't be stopped under any circumstances. But I'm actually encouraged that we've got bigger institutions and more establishment voices now involved. Everybody these days is recognizing this is a revolutionary technology, and it's going to fundamentally change our money systems, our banking systems, and finance.
Jeffrey, we're going to have to leave it there. Thank you so much, Jeffrey Tucker from the American Institute for Economic Research.